And President Donald Trump has threatened to impose a 100% tariff on all Canadian exports to the United States. And that is if Ottawa deepens trade ties with China. And the warning follows a limited trade agreement between Canada and China aimed at lowering agricultural barriers and expanding electric vehicle trade. Now, Trump accused Canada of aligning with Beijing at the expense of U.S. interests and escalating his rhetoric by suggesting that the country risks economic harm by opening its market to China. Interestingly, Trump earlier seemed unbothered when asked about the deal, and this was before his war of words started with Prime Minister Mark Carney, who openly called for a united front against Washington's aggression. Well, Canadian officials have not formally responded, but the threat marks a sharp deterioration in U.S. and Canada relations. Now, the tariff threat carries significant economic implications. The United States imports roughly 4 million barrels of oil a day from Canada and relies heavily on Canadian auto parts, metals, and fertilizer. While most trade between the two countries currently flows tariff-free under the U.S.-Mexico-Canada agreement. Well, North American supply chains have been disrupted ever since Trump took office in January last year. But the economies are so intertwined that any trade disruption can severely impact industries across the borders. Now, Canada's outreach to China reflects a broader effort to diversify trade away from the United States amid growing policy uncertainty. While China, for its part, continues to expand exports despite slower global trade growth, supported by rising shipments of high-tech and industrial goods and stronger ties with non-U.S. markets. Trade between China and the United States now accounts for less than 9% of China's total trade, which is down sharply from earlier levels. Analysts say tariffs threat from Washington risk accelerating trade realignments in 2026.